Hey everybody, Gary with Basecamp Trading. Let's take a look at gold today. In fact, you can see that in the overnight session, gold was in a downtrend. I mean, you see we're just making lower highs, lower lows, lower highs, lower lows. I mean, just all the way down. Then come into the US session, we went a little bit flat here. 5 and 13 still crossed to the downside, 50 under the 200. This chart is a bearish chart. And you can see we got a little sideways here. Momentum went a little bit flat. And then as we were coming into the US session and the US old ghost pit open, we left this big topping tail right here. The next bar was what could have been a reversal doji because the low was actually lower than the previous bar. And if this bar had triggered it to the upside, this would have been a reversal doji. Ended up just being a continuation doji in the downtrend. This bar triggered it to the downtrend, and that was your entry. The ghost pit had actually opened on this bar, and then this next bar actually triggered you into your trade. And the trigger, I mean, it's simple. 5 and 13 were already crossed to the downside, so you're looking for entry on a break below the low of the bar. The low of the bar was 1756.80, so you're probably in somewhere around 1756.70. And then on a 30-minute chart, the rule for trading in 30-minute charts is you enter, your stop goes a couple ticks above the previous bar, and then you just trail each bar all the way down. And if you had just gone by the trail, you would have gotten stopped out on this bar right here. I believe that broke the high of this bar. The high of that bar was 23.30 and the high of that bar was 23.60. So now actually you didn't get stopped out. This bar would have actually stopped you out. And it would have stopped you out at 17.23.30, a little bit above there. All the way down, you notice you never broke the high of the previous bar until finally right here. Finally right here you did break above that, so that would have taken you out, strictly following the rules, that would have taken you out at 17.23.30. So that's still a pretty nice ride down. That would have been 33 dollars in gold, or $3,300 per contract, and that's just following the rules. That's just trailing each 30-minute bar by a couple of ticks. Now, you may have ended up getting out a little earlier if you wanted to. I mean, that's a lot of profit. You know, we always lock in $1,000, and you may have locked in, $2,000 or $3,000 along the way. And if that's the case, you may have gotten stopped out on one of these pullbacks right in here. Or if you did stick with the trade all the way, our target was 17.16.10. And that target was on the chart. And so if you were just trailing, and then got to target, went ahead and took profits at target, that would have been a nice move as well. You could have picked up $4,000 per contract if you were just trailing each individual bar and then taking profits at our target. And if you trade with us, you know we trade to targets all the time. So again, you may have taken profits sooner, or you may have held on to a runner. If you held on to a runner, you had the potential to grab as much as $4,000, maybe even a little more. But if you took off at target, you would have had about $4,000, and about $4,050 is what you would have had if you had actually taken profits at target. So anyway you're trading it, that was a really nice big drop in gold that definitely gave you potential for some nice profit. We trade the Unorenko chart, and we had numerous setups off of the Unorenko chart. Right in here is where that reversal doji triggered in. You had the slow line zero touch off the 50. That would have been good for a target. Pullback, you would have taken the wick off 34. That was good for 3 targets. This was a slow line zero touch that actually got stopped out. If you were trading this, and I was, you would have taken a loss right there. no big deal. Got back in on the wick off the 50 and then just stuck with this all the way down into target. And we had a nice run down to the downside on that. So anyhow, lots of potential to get some really nice trades. Our Unirenko chart again gave us numerous trades. I had a slow line zero touch there, which was a loss. Nope. Anyone who says that they do not take any losses trading are not being truthful. Everyone takes losses trading. Get back in, no big deal. This is a perfectly valid setup. Take a loss, no big deal. You get back in, your 30-minute chart was bearish, you had a 30-minute bearish trigger, no reason not to get back in. And you come down, if you got stopped out, you had a Trender Pro 2.0 entry off the 18 there. You had another wick off the 18 there. If you were actually trading that, you might have gotten stopped out again. You might have taken a stop out right there, but then you got back in here, made targets. Another Trender Pro 2.0 entry signal for targets. Another wick off the 18 for targets. Another Trender Pro 2.0 entry signal for targets. So lots and lots of opportunities to take advantage of the big drop in gold.